Welcome. The difficulty level of this video is easy. Today we're going to examine how someone who is generally seen as a luminary in the area of finance, specifically in giving very basic advice to very mainstream people on matters of personal finance, really doesn't know anything in the field of high finance. And if you're watching this channel, you're definitely interested in high finance. But the person in question is Robert Kiyosaki. As most of you know, he was a pretty famous person in the 1990s, selling books under his brand Rich Dad Poor Dad, where he used fictional stories to help convey basic personal finance concepts meant for consumption for average people who are not really taught anything about personal finance in high school. And it's a shame that people are not taught about personal finance in high school. They should be, and Robert Kiyosaki has in fact correctly pointed out that this is quite deliberate because the elites want to keep the ordinary people poor. However, today we're going to be critical of Robert Kiyosaki because he simply does not know much about high finance at all. And this is not merely a question of being wrong about how central bank monetary creation causes inflation. In his case, it goes deeper, as we shall see. He was recently on the Kitco channel speaking about his financial predictions, and as we parse through what he has said, you will see how wrong he actually is about so many things and how major gaps in his knowledge are pretty evident, which I will point out. When someone is presenting himself as an expert and has been financially successful in his core business of selling books that have stories that enable people to learn about basic finance concepts, and he has built a fortune doing that, a lot of people assume he knows about all types of finance, including investment advice on sophisticated topics. But as we shall see, that is an assumption you should never make, and it could be costly to put too much stock into what someone like this says, because there's a huge difference between basic personal finance concepts versus high finance.
Over 127 million Americans have now received stimulus payments as part of the third round. And with an estimated 85% of Americans qualifying for the latest infusion, many are still waiting for their helicopter money to land. Now, some Democratic lawmakers are already eyeing another stimulus check. A group of 10 Democratic senators are asking President Biden to include additional stimulus money in the next spending bill. They're even proposing recurring automatic direct payments. But my next guest says that all of this free money will only impoverish the poor and the middle class. Robert Kiyosaki is an entrepreneur, personal finance guru, and author of more than 26 books, including the international bestseller Rich Dad Poor Dad and the soon-to-be published Capitalist Manifesto. Robert, thank you so much for joining us here on Kitco. All right, Robert, you recently tweeted that while the free money may make people happy now, that is going to be very short-lived. And as I mentioned, some Democrats are already pushing for recurring direct payments and automatic unemployment insurance extensions as part of the so-called Biden administration Build Back Better plan. So break it down for us, Robert. Why is the stimulus going to crash the economy and impoverish the poor and the middle class?
Well, if I could step back historically, in 1964, I was 17 years old. But that was when I became a gold and silver bug. So that's why I love Kitco, because I've been in silver since 1964, and I bought my first gold coin in Vietnam, actually in Hong Kong, in 1972, when it was illegal for Americans to own gold. I mean, Japanese American. But the reason it's not going to work, it goes really simply to this law here.
Okay, problem number one right there. Anyone who looks at the price of gold or silver, at least since 1980, so going back 41 years, can see that the price of gold has not done well at all as an investment. It has been extremely inferior to even the basic stock index, the S&P 500, and the same goes for silver. And in recent years, despite the massive quantitative easing programs done by central banks of the world, $30 trillion of money printed has not made gold gone up. Now, for those of you who watch this channel, you know why. Technology is now at an advanced enough stage that it increases the supply of commodities relatively quickly when commodity prices get too high. We saw that happen with oil, and the same has been an ongoing process with gold and silver. So this is terrible advice, and if he has been in gold since the 1960s or even since the 1980s when he potentially had more money, that is a very, very poor return that he has earned, and he doesn't mention that. But we will see how wrong his advice is as we progress further through this video.
It's Gresham's law. Bad money drives out good money. And so all the money these Democrats or whoever they are proposing, it's just going to print more fake money, more bad money. And it's going to drive out good money, which is good for gold and silver and some crypto. But the Biden plan...
Wait a minute. Good money is money that forces up gold, silver, and crypto? How can that be? Is the purpose of monetary creation just to force up assets that don't need to go up in the case of precious metals because they are simply just commodities of which technology always finds more and more supply, or Bitcoin, which is really just a construct and in some cases the ultimate pyramid scheme, but he is categorizing that as good money, whereas the bad money is simply money that is going into the stock market and into technological disruption and tech equities, which is what monetary creation is supposed to do. Federal Reserve money printing is not done in a diffuse or efficient way. I have spoken about that many times, but what is being done is better than what he is recommending. So we shall continue.
It's just going to just drive out. It's not going to work. It hasn't worked throughout history. You look at Gresham's law here, it didn't work since the time of the Romans. You know, when they were filing off the edges of their coins to get the silver out of the coin. It didn't, and violating Gresham's law brought to power a man named Adolf Hitler, which cost, 20-something million lives, all counted in. So every time Gresham's law is violated, we have massive problems. So the Biden plan is going to make it 10 times worse. That's my concern.
All right, but break it down a little bit more simpler for us. What is Gresham's law, and why does this free money ultimately serve against the interests of the middle class?
Well, because it only makes them poorer. Let me give you another warning here.
How does it make them poorer, Robert? I guess that's the point I want to get across to our viewers. How does it make them poorer for those not familiar with Gresham's law?
Okay, so let me say what Lenin said. The best way to destroy the capitalist system is to debauch the currency. So what they do is when they print all that money, and the next guy here, another favorite of mine, I'm a former U.S. Marine, and what Marx said is that there was only one way to kill capitalism, and that is by taxes, and more taxes. So you look at what Biden is proposing, he's going to print $4 trillion, and he's going to raise taxes. So what they're trying to do is stimulate inflation. But that makes it harder for the poor and middle class to survive. And so they feel good. They get this free check, there's going to be universal basic income, or MMT, which I call Marxist monetary theory. It's bad money. It has never worked throughout history.
Well, it stands to reason then, Robert, that if we do have all of this inflation and all of this stimulus and taxes being raised, that to your point, gold and silver seem to be the best hedge against that. Is that what you advocate? Is that how people should be protecting themselves against this?
Well, that's why I said in 1964 when I was 17, I didn't know it at the time. When I saw that copper tinge around the U.S. dime, and I went, something is wrong. But intuitively, human beings know what real is and what fake is. And then when Nixon took the dollar off the gold standard, that's why I went looking for gold. But throughout history, every time they've done this, it doesn't end well. So that's why I've been saying buy silver, buy gold. Now this is the problem, as some of you guys know. The price of silver goes down, but you can't buy it.
Okay, Problem number two, if the price of silver goes down, then why is it good investment advice? And the second is about how you should own the metal physically is what he's recommending. Why would you own the metal physically when you can buy an ETF of the metal or futures, which not only can't be stolen, but it's just a few clicks on the computer screen? You don't need to physically possess the metal to be an investor in the upside that you believe in of the metal if you in fact predict upside there. So we continue.
You can't find it in the stores. There's a shortage of silver. And the same with gold. You know, I was trying to buy gold the other day and they said, I'm sorry, we can't deliver it to you.
Wait a minute. So he wants to buy physical gold rather than buy an ETF or futures. Why on earth would you want to do that? Physical gold can be stolen, and buying futures gives you whatever upside from an investor perspective that he is advocating. I mean, if Robert Kiyosaki doesn't know that you can buy gold in terms of an ETF or futures, and you have to buy it physically as the only way of owning it, that is crazy. I mean, I can tell you one time I transacted 31 kilograms of gold, and that sounds like a lot, but it was just numbers on a computer screen. I did not physically have 31 kilograms of gold. I transacted gold futures where the underlying was 31 kilograms of gold, and so what? It was just a few numbers and clicks on a computer screen. So what he is talking about is so incredibly out of touch, and I know he's 73 years old, but come on, he should know that the actual ability to purchase gold can be done through instruments and not physical possession, just like any brokerage account function. But we continue.
But the price isn't going up, so that means it's manipulated to me. I could be wrong, I'm not an expert on it. But for years and years and years, I've been saying, buy silver, buy gold.
Again, horrible advice. Years and years and years he's been saying that, and it has not gone up. It has underperformed the stock market by a huge amount. Anyone who understands the first principle of technology and economics grasps this. I'm repeating this on this video because this is one of the more important themes on this channel. Any bet in any commodity, such as silver or gold, is effectively a bet against all technological progress. I repeat, any investment in an inert commodity like silver or gold is a bet against all technological progress, because technology always finds a way to increase the supply of something that is potentially scarce or where the price is rising because of short-term scarcity. We saw this happen with a much larger and more essential commodity, oil, where the price of oil collapsed because technology found a way to increase the supply of it through hydraulic fracturing and now other technologies as well. And the same has been happening with gold.
Because that's real money, not ETFs, real gold, real silver, and keep it in safes far away from your house.
Well, Robert, you're a tad unusual in that you're a staunch advocate for precious metals, gold and silver, as well as Bitcoin and Ethereum. Now, although many are coming around to holding both, in December, you called that Bitcoin will hit 50K in early 2021, and you were correct. You even tweeted it. Let's read that tweet. Glad I bought Bitcoin. Next stop 50K. Wall of institutional money coming 2021. Buy below 20K. If you missed Bitcoin, buy silver. Silver set to move due to AOC's Green New Deal. America in trouble. Future bright for gold, silver, Bitcoin, and entrepreneurs. All right, let's break down that advice there, Robert. You said buy below 20K. If you missed it, buy silver. Okay, so now that Bitcoin has hit a record high of over 61K and is now in the high 50K range, is it too late to get into Bitcoin? Where do you see it going?
That's a very good question, because it's always the entry point. Like, I bought Bitcoin at 9,000 and I thought I was being fleeced. But the reason I bought it at 9 was because COVID shut down the world economy. So I thought it was when they started printing, so I bought Bitcoin at 9. I wish I had bought it at 10 cents, like a lot of people did. But now I look like a genius, because today it's around 55,000.
Okay, now the thing about Bitcoin, I am not a fan of Bitcoin or other cryptocurrencies. My advice has consistently been that average people should not be mixed up in this. I am a fan of distributed ledger technology, but buying cryptocurrencies is not necessarily the best way to further distributed ledger technologies or to invest in them. And Bitcoin is just one of 9,000 cryptocurrencies. It just happens to be the largest because it was the first one and therefore got all the media attention. But isn't this funny? He says you have to own physical gold and silver, not even a gold ETF. A gold ETF is something not very good, even though you can transact it quickly, you can do options on it, you can do limit orders and all that. But you have to own physical gold. But the same person is now advocating the ownership of Bitcoin, which is the most imaginary thing you can think of. There is no physical Bitcoin. It's just a notional idea of something that exists in a certain supply that people trade back and forth. So a gold ETF is not a stable or real enough way to own gold, but he is an advocate of Bitcoin. Now, that doesn't mean that Bitcoin will not go up. I am not here predicting the price of Bitcoin. It can keep rising, it can fall, because it is entirely governed by the hype machine and by speculators and traders. But Bitcoin is not resonant with the first principles of technology, because it is not a technology that improves the human condition or increases the productivity of anything. It just exists as something that different people seem to believe in for very different and often incompatible reasons. But now you have Robert Kiyosaki advocating Bitcoin and saying the price will go up to some very high level, which it might, but it will not sustainably be over that level. I can tell you that there's nothing about Bitcoin that is special in relation to even other cryptocurrencies, which themselves are not a necessary asset class for the furtherance of distributed ledger. And I've been a fintech expert for many years. I've published a lot of reports, I've spoken at conferences, and I teach this subject at Stanford University. But we shall continue.
This is April 2021, and I think it's going to go to 1.2 million in 5 more years. So I'm still advocating it all. I prefer gold and silver, I do, because Bitcoin is still untested.
Well, that is the first accurate thing he has said, which is Bitcoin is untested, and it may not be worth anything because it is only worth what people believe it is and what they're willing to pay. It is the furthest away from his definition of real money that you can possibly imagine. So on this point, he's a little bit correct, but the fact that he's even advocating Bitcoin from a day trading and speculative point of view is very inconsistent, I must say.
But I have the wherewithal to withstand a hit if it goes down. But gold and silver are God's money. I know because I've traveled the world looking for this stuff. And I've been in the Andes, I've been in Mongolia.
No mention of how the price of gold and silver has not risen over 40 years to nearly the same degree as the stock market. It has been a terrible investment for the long-term holder. And notice he doesn't talk about the price of gold and silver, but he was quick to talk about price points and price forecasts for Bitcoin.
So I'm very much in favor of gold and silver because it's God's money. God put it here. I'm not really religious, but I'm saying God put it here. And then now with AOC and her Green New Deal, silver is going to be used more and more for the environmental. So silver is an industrial metal, but like the thing that really is strange is I can't buy it at retail. So I go to a coin dealer and I just test them and say, have you got any silver? I said, yeah, in about 6 months. Why is the price not higher then? That's what I don't understand.
Well, if you watch my channel, you will understand why that is. Technology increases the supply of commodities. The technological medium is always accelerating, and the ability of technology to mitigate shortages is rising and rising and rising. That is why the oil spikes of 1974 and 1981 could not be met with a technological solution, but the oil spike from 2007 to 2014 was met with a technological solution because technology was more advanced and the supply of oil increased. The same is happening with gold. The ability of drones to increase the productivity of gold prospecting by 100x has been established because you have drones flying around shooting electrical pulses in the ground. Therefore, you don't have to prospect on the ground. You can cover a wide area. Plus, we have asteroid mining in our future within a decade or two, and they have already identified asteroids that have billions of tons of gold, platinum, and silver. And when we are even 3 to 5 years away from accessing the asteroid, but it seems like someone is putting a credible effort to actually reach those asteroids, you will see the price of these precious metals plunge because suddenly there's a 5% chance of a major increase in supply within the next 5 years, and the pricing of speculators will adjust well before actual well before actual gold from any asteroid is brought back to Earth. So there will be a repricing of even the expectation of gold supply. So this is what will happen. So we continue.
Okay, let's focus on silver, but I certainly want to circle back to your Bitcoin projection. What do you think is going on with silver? Because you've indicated several times on this program, as well as on your own podcasts, that you suspect that there is some kind of manipulation in the silver market, driven perhaps by the fact that so many of the world's biggest corporations need it for their products, particularly in the tech sector. So expand on that a little bit for us, if you will.
Well, I think the big thing is, for batteries right now. And, there's Tesla, there's Sony, all the tech companies use silver.
Okay, this is a valid point. This can increase the demand of silver or other suitable precious metals because of a new industry being created, yes. But that does not change the fact that there is a tremendous incentive to increase the supply of silver, and therefore there is going to be more innovation devoted to creating more silver supply. Just like what happened with crude oil, the same will happen with silver. So this is a decent point, but he's not accounting for any factor that can increase the supply of silver technologically. So you can't say technology increases the demand of silver, but technology would never increase the supply of silver. That technology would never increase the supply of silver.
So silver is getting rarer and rarer and rarer, and more in demand. Whereas, I have my gold watch, but you don't use it that much. It's just gold. But silver is burned up all the time. It's used in medicine. It's used in everything, water purification. So that's why for the last, I think, 15, 20 years, I've been very bullish on silver, and then I couldn't get it. So
he was very bullish on silver for 15 or 20 years. I will show a chart at the end of what the price growth of silver has been, and especially in the age of central bank monetary creation, which he thinks is what will boost silver prices. And I'll have some charts about that at the very end.
The other day, I called my local dealer up and I said, "Have you got it?" He says, "You won't believe this. I got X amount." I said, "I'll take it." I paid nearly $30 for it. I've never paid that much for silver. But I'm that bullish on it that I want to get as much as I can now before it moves again. So that's just my psychosis. I'm not saying I'm right. I just love silver. I love gold. I've got all the world.
It's okay to love the aesthetics of a precious metal. You can also paint something gold as well. But advocating it as an investment thesis and not talking about the price performance of those metals over the very lengthy time frame that he has been an investor in these metals is wrong, I think. And notice how he's not mentioning how the price performance of it has done over the 50 plus years that he's been involved in it.
Looking for it. I believe in Gresham's law. Bad money drives out good money. And this guy Biden, I'm not blaming Biden, please don't me, I'm not Republican or Democrat. I'm just saying that the system is forcing all of us to become gold and silver and possibly crypto buyers.
No, the system is forcing all of us to be technology investors, because the first principle of technology and economics is that technology generates deflation, which consumes the money printing that central banks do. And that is why technology assets have outperformed all other assets, and certainly gold and silver, during the age of quantitative easing that has been going on for 11 years and will continue to go on. Remember, the amount of monetary creation the central banks of the world have to do is rising exponentially. This is a very good thing for human prosperity, because we're going to be in an age of abundance sooner than a lot of people think, at least by today's standards of prosperity relative to what we will have in the not too distant future.
Right now.
All right, well, let's hit back on that crypto point, because you said you're projecting Bitcoin to be worth over $1 million in about 5 years' time. Is that what you said?
Yes.
And why? Why do you think that? And why do you not think that the government may intervene in one form or another?
Well, I think they'll try, but the problem is too big, Michelle. Our pensions are going bust. Baby boomers have no money. They shut down the economy. They're going to print, Biden's going to print another 1.9 trillion. So it has never worked. It's Gresham's law. Bad money drives out good money.
Yeah, he's repeated that 4 or 5 times, and it doesn't really make any sense. But the other problem in what he's saying is, from a standpoint of U.S. fiscal situation, he's thinking in terms of one country only, the United States, and that baby boomers have not enough for retirement and all that. And that was, in fact, the thesis of a lot of his books in the 90s. But he made the common error of people of his generation of assuming that the United States is the only country in the world. There's a whole wide world out there. And if he's so enthusiastic about Bitcoin and gold, these are international commodities. The amount of money printing being done by the United States is not large relative to total world quantitative easing, nor is any fiscal distortion in the United States large relative to the size of the entire world economy. Now, if he likes internationally priced items such as Bitcoin and gold, how can he not see that seeing the United States as the only country in the world is going to mess up the calculations he presents and the entirety of his thesis? But we continue.
So when a guy like me gets my hand on a Bitcoin, I'll never spend it. And when I have gold and silver, I've only spent a little bit of my gold. I've never sold it. You know, I'd rather save it. So when I need money, because I'm a real estate guy like Trump, I borrow money. So when interest rates drop really, really low, like they are now, under 4%, I'll borrow millions of dollars because it's fake money. And I'll spend fake money, but I save gold, silver, and today some Bitcoin. Bitcoin is untested yet. But that's why I was happy to get some at 9,000. And I may buy some again today or tomorrow just because I'm more bullish on it. But I'm not bullish on gold, silver, or Bitcoin. I'm just bearish on Biden and his communist gang. That's what I don't like.
You're seeing crypto, gold, and silver really then as a way to safeguard against dollar devaluation.
Yeah, I don't trust the academic elite. That's called Bernanke and Yellen, and now we have Powell. These guys are communists. They print money. They're central bankers. I really don't like how they screw everybody. It makes me rich because all the CEOs take all this fake money and they drive up the stock price. But the working class guy is getting screwed. The person working for money, trying to pay the rent, trying to this.
This is true, and this is not for the reasons he says it is. It's because the central bank monetary creation is done in a way that concentrates among the super rich. I have advocated for many years, those of you who have been following all my writings and this channel know that I say central bank money has to be given directly to people, and taxes have to be lowered proportionately too. That's how you create a low tax and eventually zero tax society with a universal basic stipend that is much more dynamic than a lot of universal basic income proposals, which are in fact just socialism. But what I have advocated is far more high-tech, dynamic, and resonant with the first principles of technology, but that is a story for other videos.
They can't afford to buy a house. They don't buy stocks. They're just surviving day to day, and the price of food keeps going up and all this. That's what happens when you print money. That's what brought Hitler to...
But the price of food has not been rising to an unusual degree over the 11 years that money has been printed by the central banks. He's speaking as though this money printing is something that's only happened just now in the last few months. And that is not true. The video on this channel right before this one shows you exactly how much was printed per year, and it has already been going on for 11 years. Food inflation has not been high in the United States, period.
To power. After 1918, when the Weimar Republic started printing all this fake money, you saw it in Zimbabwe, it's happening in Venezuela, and they screw the poor. It makes me sad. Why do we, I've always said, why do we have financial education in school? Just teach them Gresham's law. Bad money drives out good money. Yet our school teachers, those idiots, teach kids to save money. You got to be crazy. Just tell kids to save silver. They'd be a lot better off.
Well, that certainly has worked for you, Robert. So you say gold, silver, Bitcoin are really all ways to protect against the dollar devaluation. But Bitcoin is not the only crypto that you like. You also like...
Okay, we can stop over there. But in summary, what we have seen here from this video is someone who is connected to a different area of the notion of finance and basically writing popular books for people to understand basic concepts of personal finance through the narration of stories and all that, is actually a very poor investor in terms of selecting asset classes that actually rise over time, and not really someone who understands the first principles of technology and economics at all. One reason he's so impressed with Bitcoin is because of his low-tech orientation, that he is impressed by something that is marketed as being high-tech, which is Bitcoin, but it is not high-tech at all under any true definition of high-tech. And hey, it may still go up. I'm not saying that it won't or anything like that. However, long term, it's not a good bet because it's not resonant with the first principles of technology, and there are, in fact, 9,000 other cryptocurrencies other than Bitcoin, many of which have much more advanced distributed ledgers associated with them. So Bitcoin is, in fact, the more obsolete technology out of cryptocurrencies. Yet, nonetheless, I maintain my advice that average people should not get mixed up in cryptocurrencies at all. It is still a pump and dump scheme, and it is not a hedge against supposed inflation, even if such inflation were to show up from central bank monetary creation, which is not going to happen for reasons that I explain. We close off with a chart of gold and silver prices over the time frame that Robert Kiyosaki has been talking about his love of these precious metals. So this is the price of silver over 100 years. You can see that Robert Kiyosaki's time frame, 1964 or 1965, silver was $10, 60 cents, $11. And even if we assume that he became wealthy enough in the 1980s to buy it, fine, the price was $16 in the 1980s when he bought it. And today, what is it? What is it in 2020, 2021? $24. So it has barely doubled in 55 years, and it has hardly risen at all in 37, 38 years. What is the percentage annual return of that? It's actually zero. I mean, he didn't even talk about taking a convenient point like this and selling here supposedly. The long-term trend is not there just because it is a commodity for the reason that I mentioned. By contrast, the stock market, just the S&P 500 index, has risen by 10% a year over the same period. So if you had $10 and you put it into the S&P 500 in 1965, you would have over $2,000 today. Silver only went from 10 to 24, 27, 24, whatever. And the longer term trend is still downwards for the reasons I explained, especially now that technological pressure against it is much higher than it would have been even in the 20th century. But this is a 100-year chart of silver, so how on earth he can advocate buying silver as an investment strategy is really quite absurd. And notice how he didn't talk about the price he bought it or the price of it going up, but he did talk about that with Bitcoin because there the price trend has been favorable to his narrative. Okay, this is the price of gold over 100 years, and it's a little bit less bad than silver, which is ironic because he said that silver actually has industrial uses and gold, well, it does have some industrial uses, that's a very small percentage of demand. But in 1975, it was $772 an ounce, $800 an ounce. Sure, in the 1960s, it was $300, so that was potentially less bad of a time to buy it. But in the 1970s, it was $600 an ounce, $800 an ounce. A brief spike in the early 80s because there was an inflation crisis then. But even then, $1,100, $1,200 an ounce after the spike in the early 1980s. And here we are, 40 years later, it's barely any higher in price. It is the same price as it was 42 years ago in 1980, or even if you bought it at an average price of the 1980s, your money has barely doubled in the 35 to 40 years since that time, whereas money placed in the S&P 500, or better yet, the NASDAQ stock market, has gone up a tremendous amount since that time. The S&P 500 would have given you about 50x your money over that time, for sure. Had you put $1,000 in the S&P 500, you would have now $50,000, whereas $1,000 in gold would be $1,500 to $2,000. And this is not a surprise when you consider the first principles of technology, and the technological forces, yet again, that can increase gold supply are becoming powerful only now. These forces were much, much weaker in the 1980s and even 10 years ago, but now technological forces to increase gold supply, everything from drones to deep sea prospecting to ultimately the biggest increaser of the supply of precious metals, asteroid mining, means that gold's downward trend is much more powerful than any potential uptrend, because it's just absurd to be advocating gold as an investment vehicle, especially in response to quantitative easing. In fact, in the 10 or 11 years that quantitative easing has been done, gold is net flat. Quantitative easing started in 2009, $30 trillion has been done, and gold has not increased in price. It actually went down a lot and has recently increased a little bit because of the higher rate of quantitative easing on a speculative level. That will be reversed very quickly as well, and it'll probably settle back down to the old price or lower for the reasons I have described. So this video has gone on pretty long, but I hope you learned quite a bit from this video and about how people who succeeded in one area somewhat related to finance do not really know anything about high finance and do not know anything about technology either. And Robert Kiyosaki came across as very, very lacking in knowledge on this front. And I don't mean to be too hard on him, but I don't put him in the same category as Peter Schiff, who actually does know a lot about high finance, is right about a lot of things. He only doesn't know about technology, so his prediction about inflation and gold is wrong for a reason that is still a much more intelligent error than the error that Robert Kiyosaki, particularly when he has the gall to say that he's been in gold since 1965 and has always collected gold and silver along the way, but never talks about the price of those, because if you looked at the price of these precious metals over the time frame that he's bragging about how smart he is, you would see how terrible of a decision from an investment perspective that is. If he likes it from an ornamental jewelry perspective, that's a different story. That's up to him. But then see that as an expenditure, not as an investment thesis that you're recommending to others, for God's sake. And the same person is excited about Bitcoin and then talks about how he bought Bitcoin and the price went up, something he didn't say about gold and silver. Anyway, that's enough of a rant, but I hope you found this video useful. If you like this type of content, I encourage you to upvote this video and subscribe to this channel. Thank you for watching.